had the brilliant idea to go to Bear Stearns. I went there, 6 months before it went down. So that was genius on my part. After Bear went down, and then I was on at JP Morgan during the crisis when Lehman went down, I knew that wasn't going to be the career for me because I saw behind the curtain, before I went there, I thought these guys were so smart and all this and that. I was going to be a trader, at least on the sell side. And then I thought, all right, no. And that to me was like just an eye opener that, maybe I don't need to be that bright. Maybe I just need my good old fashioned common sense and I can win with that. And that turned out to be, I think, the truth. And that pretty much gave me more confidence to get on my, path of starting a fund, and that I can actually do it and do it well, as long as I stuck to the core common sense principles of it. And so I started, a couple of years after the crisis, and, I spent that time, research and trying to build an actual system. I did everything in Excel. I did everything by hand because I really wanted to get under the hood and see how everything moved and worked. And, so I started that way. And here we are, 6.5 years later. If you're ready, do not wait. Go.
Yeah.
Go. Because you don't know what you might miss. And I'm telling you, sometimes the markets don't really give you what you want in the timing that you want it. It's like, okay, well, that was a good year. 2012 will be a bad year, and 2013 will be great, and then it's not great, and you're stressed now. So I feel like when you're ready to play, go ahead, go. I like to work with people who question me, who are not afraid to ask questions, who are not just blindly listening to me and all that. Mm-hmm. My job is just relay the facts to you, and my job is to relay the facts ever more clearer and succinct to people that help them make a decision. So, that's just my approach. There's a lot of different approaches. I want people to invest in me based on, merit, my performance, their trust in me. I'm selling people on the truth and the realities of how trading actually works. And people can, buy into that, and they want to go with me doing it, quote unquote, the right way. That's great, because likely they'll be here with me for a long time. And that's what I like. I don't like the quick in and out, get people jacked up and, raise a ton of money, and then they leave, and then I got to do it again, forever. I don't like that. I'm not really in it for to maximize my money. I'm maximizing survival, to never go out of business. It's not to minimize losses. It's not to maximize gains. It's really just to never die. It is to profit, right? But it's I don't have some curve fit strategy with my trading. I don't have some curve fit strategy with my business model to make money off of people. It's hey, let's go for it long term. Let's be in this relationship a long time. What do you think, a fair model is? A fee structure that you're comfortable with, that makes sense for all of us, and that you could see abiding by, for 20 to 50 years. This is good. This is not some venture fund where we're going to try to make a ton of money and this is only a tight window of time, where it's a special situation and I'm trying to make as much money from everyone because this is going to be a short-term play. No, this is a long-term, relationship, as close to marriage as you can get.
The idea was more or less sparked in one night. First of all, I did have a lot of success trading in 2017, of course. And so people used to tell me, hey, why don't I give you my money and you'll trade for me? And I was like, I can't do it because I didn't want the legal risks and all that kind of stuff. But then it all changed when, people used to tell me, hey, I'll give you $10,000. But then one night I was in LA with one of my clients, and he's a multi-billionaire. And we sat at dinner, and almost choking, as if it didn't mean anything to him, his lawyer was like, hey, why don't we just give Felix $10 million to start with? I'm like, oh shit, there is the types of people out there that can say, let's give this guy 10 million to start with. Like, it meant nothing. And that really created a paradigm shift in my mind where I was like, holy shit, there are billionaires out there, and there's a very thin market of people like me that have mastered these markets, that understand these markets, and there's a real opportunity here. So in that same month, maybe a week later, 2 weeks later, I looked up all the leading crypto fund attorneys, and I made the first payment to set up my crypto hedge fund, because I knew, like, if I met one person like this, I will meet more. And I knew I still had an early move advantage. So I set that all up, and I realized it's a lot simpler to set up a hedge fund than you think. It's just really expensive. So like, you know, because initially I thought, oh, well, I need all these licenses, I need all these like different things, but anything can be bought, right? So like the only thing you can't buy is experience. So I had that. I had the hard part of like having the experience. I had the hard part of having people that want to give me money. Everything else, like, you know, finding an attorney, finding administrators, finding auditors, setting up bank accounts, that you can pay for that. So what used to hold me back turned out to be a lot simpler. It's just a question of time and money. One of those things where you make a decision and there's no going back. You know, I had that then I was like, you know what? I got to start this fund. I want to show these guys that like I'm making moves that like I can actually accept a check about if they were ready. And it turned into a reality so fast where one guy offered me money, the next week another guy offered me money, and all of a sudden the dialogue changed from me saying, sorry, I don't want to take your money, I can't take it, to, oh yeah, that's great, I'm actually setting up a fund. And all of a sudden the numbers started adding up. And it really created a shift. And it was really just a question of, you know, once I made the decision, there was no going back. And especially once I made the first attorney payments, I mean, attorney payments, they start in the 5 figures. So, you know, once I put that money down, I was like, I'm committed to this now. We'll go with it. You will know when the time is right to start a fund, in the sense that if that is a problem you have, it's probably not time to start a fund. Even for me, and I'll say this, you know, I probably had a list of like 100 hot leads, you know, and all of them gave me like verbal confirmations. Well, like yes, I'll give you money. It's ready whenever. And like, I'm just waiting for you. And maybe 80% didn't close initially, you know. So you really have to, I would say, whatever number of money you think you're able to raise, multiply that by 0.1 or 0.2 or 0.3, because a lot of people act like they have money, but they don't. You know, they will promise money that they don't have, or something comes up. So really, I think, again, you will know when the right time, because you should have all the things in place, meaning you should have the experience. You should have the track record where you're able to execute. That's the most important part. If you can't execute, you're not ready. Part 2, your track record should be so established that people know about it, that people literally come to you, that people talk about you, that people recommend you, you know? Again, I never wanted to start a fund. I really started the fund out of the fact that I had so many people say like, hey, can I just give you my money? Because they know how well I did. And then 3 really is just like, you know, having that network, actually knowing enough wealthy people. And this is the biggest challenge I still face, and it's something I'm working on, is that if you want to be in this finance game, you have to be friends you have to have lots and lots of friends that either make 7, 8, 9 or more, you know, figures, which the average person just doesn't have. You know, your friends won't cut it, because they have to be accredited investors, meaning you won't even be able to get in the door unless you have a net worth of $1 million or more, or have been making 250K for 2 or 3 years. So that really makes the pool smaller. So I would just say, if you don't have those things yet, and you think about, hey, in the future, it's my goal to run a fund, keep honing your skills, become a better and better trader, talk about it, share your results that will attract some people, and always be networking, always make friends. And just, again, don't think about just closing them right now. Maybe you are 20 years old and you think, I want to start a fund in the future. Don't even ask them for money. Just tell them you're trading. And then if maybe 2 years, 3 years down the road, and they realize, wait, you're still trading? You didn't just blow up your accounts like everybody else did after 6 months? There might be something to this kid, you know? So I would just play the long game.
Here's the thing. Here's the truth, man. Money virtually, trading the market, whatever market, futures, commodities, Forex, or stocks, you can make money in real trading account. The only difference is right here. That's the only difference. What's the difference between fake money and real money? It's your perception. It's still numbers on the screen. It's still going to move the exact same way. If anything, it's harder with fake money because you get delayed data. You know? So if you can make money in virtual trading, there's no reason why you can't make money in real trading. It's all a psychological thing. So anyway, to answer your question, prove to yourself that you can make money virtually first. And if you can, most firms, most companies that you work with and partner with, it's not that big of a requirement, realistically, to go in and to pony up some cash. I mean, we're talking $3,000. Like anyone can get $3,000. So you prove to yourself with a small amount of money, and again, even if you have millions or 100,000, having that ability to prove and to test that it's okay, that you know how to do it, that's key, man. You have to really study your wealth consciousness and what money means to you. What is a lot of money? Like, do you know that answer? Like, do you know the answer if I said, what's a lot of money? A lot of people say $1 million. Bro, $1 million is no longer that much money. You know, $1 million is not, you can buy a car for $1 million these days. You know, there's watches out there that you can buy for $250,000. $1 million is not that much money anymore. So you have to define certain terms, like what is a lot of money? What is a little bit of money? How much do you need a month to survive? How much would you want per month? How much do you feel like you deserve every single month? Because when you trade other people's money, it is a slow process initially. Like, it's not like you just go in, you hop in, and boom, you have all this money, so now you're just gonna make tons of money. You have to be okay with making money, like internally, because a lot of people will find themselves being totally fine taking small profits and big losses. And you wanna know why? The fear of greed. Now, I'll explain what I mean by that. A lot of people inherently and subconsciously feel that they are greedy for trading the stock market or the Forex or the futures market. They feel that they're greedy, and they feel that they're greedy if they want a lot more. But here's what happens. Subconsciously and consciously up front, nobody wants to be labeled as greedy. So if you say, yep, if I make $2 million, I would love to have $2 million, but I don't need any more than $2 million, because if I get to $15 million, then that's just too much and now I'm greedy. What will inherently happen is every dollar you make, you're getting closer to what number? The greed number. You're getting closer to becoming greedy, and your mind and your body will not let that happen. So what will you do? Self-sabotage. And that's one of the biggest breakthroughs I've ever taught and learned in trading. And that's why people all the time, all over the world, will be very comfortable taking small gains. Let me take 50 bucks here, 50 bucks here, 50 bucks here, 60 bucks, 100 bucks, 200 bucks. And then boom, I just lost 1,000. Why? Why did I lose 1,000? Is it risk mitigation? Nah. And sometimes you'll go back through, and it's because for a number of reasons, because your mind doesn't want you to make money. So yeah, man, you've got to go in and you got to really wrestle with yourself and figure out, are you okay making tons of money? Because you're not greedy. You're not greedy. If you, at any point in time, said in your mind, if I make more money, I'm going to help XYZ person, or I'm going to do XYZ for this particular person in my life, that's not greedy. If you want to give, if you want to donate, if you want to do anything with your money other than hoard it to yourself, you literally and inherently cannot be greedy. So I would tell for most traders, and here's the crazy part though, man. Everyone in the world says the markets are controlled by what? Fear and greed. And so we are taught to believe that we're greedy, where they call the people who make money trading greedy. Even though they're not greedy, all they did is figure out that they can have all the money that they want, not be greedy, because there's tons of money out there. Money is limitless, so you can have as much as you want. They'll never run out. You're first. Dude, once I realized that, game changer, because then I could go and make as much money as I wanted to and not be greedy, because I know I'm not greedy. I give so much of my money away, man, it's insane. But I want more. That doesn't make me a greedy person, because if I have more money, I can help more people, and that's just easy for me.